Good morning, everybody. This is Tim Melvin of Banking on Profits coming to you this morning. We had a little bit of a publishing holiday this past weekend while we moved from one house over here to the new house and getting the office all set up. I still don't have my pictures on the wall, so I don't have my Donnie U and my Pelicans all over the place, but we'll get that done. But since we didn't check in with a regular report on Friday, didn't get a reading list, I just wanted to shoot out a quick video. We got a new setup. We'll see if this works any better. Maybe we'll go back to doing an occasional video. You guys chime in, let me know if you like them or not. But anyway, we're sitting here. The markets, the S&P's 1% off of all-time highs. The NASDAQ last week, everybody's, oh my goodness, the tech stocks are plummeting. It's horrible. The world's going to end. Well, the QQQs are 4% off all-time highs. So not really a buyable panic or a investable moment just yet. And I think we're probably still a ways from having anything like that occur. The big news last week, of course, was Amazon buying Whole Foods. Got to confess, I knew Amazon wanted to be more involved on the food side, but I thought they'd do it organically. I really didn't see the Whole Foods buy coming. It's just another shot across the bow of the grocery stores. Saw all the grocers sell off. Because now we're going to put Amazon's distribution network, the existing Whole Foods warehouse network, as well as the brick and mortar stores together. And that is a category killer, especially in the upper end of the grocery business. Now, I've said for a couple of years now that most grocery stores probably shouldn't be public companies because they cannot compete on price and still show the type of accounting profits that Wall Street is going to demand to justify a reasonable stock price. Now, the proof of that is H-E-B in Texas and Publix down here in the Southeast. I love my Publix here in Florida. Now that we've moved, I've got two of them equidistance away, so I can kind of rotate Publix. They have great employees. Their employees are happy. There's no layoffs to meet quarterly numbers. There's no, they're able to compete with Walmart and I guess now coming up Amazon on price. So really most grocery stores should be relatively mildly leveraged private companies. They're going to be much more competitive against the Walmarts of the world and now the Amazon Whole Foods combination. Nobody listens to me on these things, but if you're in the Southeast, I'm sure you've been in a Publix and you probably agree with me. And as my wife constantly reminds me, you can't spell Texas without H-E-B. That's not a grocery store out there in the Lone Star State. It's a cult. The big news for us, of course, was Wolverine Bancorp was taken over. That's an over 100% gain. We bought it 3.5 years ago, I want to say, in the main portfolio. It was one of the first stocks to go into the portfolio. And those of you who have been buying off of the Community Bank Stock Investor monthly focus picks, well, you guys just bought the stock last year, and in both cases, it's over a 100% gain in the portfolio. Portfolio could not be happier with this, guys. This has worked exactly as I'd hoped it would work 4 years ago. We have no losing stocks in the main portfolio. We have no losing bonus picks. That's never had a closed loser. All of the stocks that we currently hold long in the portfolio are higher than the original recommendation price. Now, in the monthly focus picks, we do have a couple of losers. We got one stock that's down about 1% and one that's down a whopping 5%. All of the rest of those stocks are up. And the returns have been fantastic for Banking on Profit and Community Bank Stock Investor subscribers. Hopefully that's most of you guys listening. The bonus picks, they're the smallest banks. And you remember, we can't put them in the portfolio because they're real small. And I cannot guarantee that all of you are going to get filled somewhere around the current price. Some of you are going to have to be patient. And to be honest, some of you are never going to get filled around the current price. So we make those bonus picks. We don't put them in the main portfolio because that would artificially inflate our performance. And I don't feel like we have any need to do that. Our performance speaks for itself. The bonus picks, since we started doing them, the annualized rate of return on that portfolio is about 30%, a little bit shy of 31%. For the focus picks, been doing those a couple years now. The annualized return is just a little bit south of 21% a year. The main portfolio is now 4 years old. If you were with us back then, you remember we kind of eased into it. It might have taken us a good 4 or 5 months to get something close to fully invested. That's annualized at a really respectable 17.5% rate of return. Remember, in that main portfolio, we follow some really strict valuation, margin of safety, and buying criteria. So, 17.5% is great. We're a little looser with the focus picks. We'll put some more growth oriented banks in that portfolio. And of course, now the bonus picks pretty much have to follow the same rules as the main portfolio, but they're all, I think, under $20 million in market cap. So you get kind of a small cap kicker to that. But returns again have been absolutely fantastic. I think it's going to continue for some time more. We're still kind of in that sweet spot. The economy is not it's not on fire by any stretch of anybody's imagination, but it's doing pretty well. I mean, it's going forward. It's what I call better, but not great. Okay. It is still growing. We are creating jobs. I mean, we've got full employment. I don't, you know, not quite sure I agree that we're anywhere near full employment because of the labor force participation rate. We're still not creating the great higher end jobs, but we are creating jobs. We're moving forward. That's fantastic news for the banking industry, especially our small banks. Getting no help on the interest rate front at this point. We did just raise rates last week by another 25 basis points, but I don't see 2 or 3 more rate hikes on the horizon unless something dramatically changes. I don't make predictions, so if it changes, it'll happen. If it does, we keep going like it does, they'll be lucky to get 1 or 2 more. So we're not going to get a lot of help from net interest margins in 2017. But our banks are doing a fantastic job taking market share from the bigger banks, making loans in the community, establishing relationships, doing all those things that great community bankers are supposed to do. And we're showing really respectable earnings and book value growth pretty much across the board in all 3 portfolios. So we're very pleased with the performance. The industry's still very much in a sweet spot. If the politicians can quit being politicians for a couple of days, we may get some regulatory relief. We could very well see some of the rules start to relax. Particularly important would be the increase in the threshold for significantly important financial institutions, the SIFI rules. If that could go from 50 billion up to 100, we heard discussion of 250 billion. That really spurs an additional bunch of consolidation because it brings like a dozen known consolidators that have gone over 50 billion back into the takeover game, and they'll start buying some of those 5, 10, and $15 billion institutions. So we're real positive on the second half of the year for the community bank stocks. We do still have our hedges in place. Not going to remove them because valuations did get super stretched in the Trump rally, and we saw a lot of hot money come in to the sector, and hot money in 500 million in total assets, $80 million in total market cap stocks. Not a good idea. If those guys decide to go home, it could get a little bit ugly. So we'll leave that hedge in place for the rest of the year, just so we can all sleep a little bit better. But that's kind of where we are as far as the bank stock portfolio. So be careful. There's not a lot to buy in the with both the bonus picks. I sent in the blog a couple weeks ago. I marked them off as what was buy, what was a hold. That list has not changed. Every month, the Community Bank Stock Investor just went out last week. We do identify hold or buy. And then, of course, every week, with the exception of last week when we took a little publishing holiday, we send out a buy list. I'll have one of those out for you guys on Friday. Stick to buy rated stocks here. Markets are very extended, very richly valued at something like 26 times earnings on the S&P 500, much higher than that on the Russell 2000. So let's just be careful. Stick to the buy rated stocks. Use limit orders. Take your time. Be patient. All the things that I'm always saying. We should have a real good second half of the year. I think consolidation. Once we get a little better feel for where the regulatory environment's going to go, we'll see continued pickup in the pace of consolidation in the back half of 2017 going into 2018. Okay, now, what else have we been up to? Because, once we buy them, we don't do a lot. We read a lot of stuff. We talk to a lot of people, kind of gather information. But it's not like we're day trading or running marathons or anything like that over here. So I've been doing a lot of reading. The new John Grisham is out, Calico Island. Best one he's written in several years. New Jack Ryan novel out. I love these things. Now, I know they're not Tom Clancy. Tom Clancy, of course, passed away several years back. But he introduced a great set of characters, and it's neat to see this string of authors come in and keep the franchise alive. The new one, actually, an excellent fun read. Just don't compare it to Tom Clancy. Tom Clancy was incomparable, and he is no longer with us, unfortunately. What else do we have? Just downloaded a new biography of William Donovan, the founder of the OSS. Pretty excited about that. Going to be digging into that this week. Robert Tarrant's new Captain Jack series. He had a new offering. I believe that's the fourth in that series. If you haven't read it, that's a fantastic, fun set of books. And again, I do a tremendous amount of professional reading every day, all day, but I also do a lot of recreational reading. And my favorite thing to do in the evening is, of course, I like to click on the baseball game. Last night, Father's Day, the Orioles were on in the afternoon on MLB Network, so it was just perfect. Just on the couch, reading a book with the Orioles thumping the St. Louis Cardinals on. So that made for a fantastic Father's Day for me. Father's Day, that reminds me. Let me just jump that one in there. Gonna be a grandfather come December. Pretty excited about that. Personally, I think, I look a little young for the role. But my daughter and her husband are going to have their first child later this year. Can't wait to be a grandpa and spoil that child crazy. Anyway, in baseball, we had that whole meltdown in Baltimore that went on for a couple weeks, basically pitching batting practice every game. Saw some signs of that this weekend, even though we took the series from the St. Louis Cardinals. So bats are doing the job. The the pitchers are not. And worst of all, the Yankees, I thought they were a year away. They look like they're for real right now. I got a little losing streak going, but they've been red hot, and it's a very talented young ball team. So it's going to be an interesting year in the rest of the Eastern Division of the American League. We'll see what happens. So what else do we have? The Washington Nationals. I don't know if you've been watching them, but they are a bullpen away from greatness, folks. That is one fantastic baseball team. They're going to run away with that division, but look out because the Los Angeles Dodgers look about as good as they've looked in a very long time, although currently trailing the Colorado Rockies and the Arizona Diamondbacks. So it's a weird, wacky year in baseball. Been a lot of fun, and hopefully that continues through the rest of the summer. Market, who knows? I don't know what the market's going to do. Anybody that tells you with any degree of confidence that they know exactly what the stock market is going to do, well, you should probably kick that person somewhere interesting and get as far away from this humanly possible because they're there to separate you from your hard-earned cash with nothing in return. Nobody knows what the stock market's going to do. It's richly valued. The economy's growing fairly slowly. You could make a heck of a long-term bear case. But guess what? There is absolutely, at this point in time, absolutely no sound reason for a widespread stock sell-off. And there's still tons of money coming in on the passive side. I think this is gonna end up being a disaster, but there's a lot of money flowing into index ETFs, and that is to some degree keeping the market at fairly rich valuations. There's no reason for it to go down at this point in time, and I have to tell you, I don't think it's going to be an economic or financial reason that finally does drive the market down. The Fed, they're trimming the size of the balance sheet. They're talking about trying to raise rates. The market doesn't really care. The economic forecasts for the rest of the year are not fantastic. The market doesn't really care. Most of the projected growth in the second quarter, by the way, is supposed to come from energy stocks. I don't know if you've been watching the price of oil, but I'm not real sure that's actually going to happen, which is going to bring the S&P growth rate back in even further than it already is. So lots of reasons that make you a little nervous about the market. But until we get some sort of, and I believe it's going to be a geopolitical event, either from Russia, from Greece, we can always rely on our good friends in the Middle East for some sort of geopolitical wackiness. So something is going to have to create a valid reason for a stock market sell-off. And when it does, we'll happily be here. We'll have some cash, and we'll get even more involved in the community bank stocks. Till that happens, we stay with buy list stocks. We move slow, we be careful, we try to buy on down days, and just do all those common sense things that we've been doing for the last 4 years that have worked out pretty well for us. Anyway, we'll be back on regular schedule for those of you that are subscribers. We'll have a commentary out on Friday, buy list up Friday afternoon, and a reading list out Saturday morning. For those of you that are not subscribers, shame on you. The numbers are fantastic. We're not day trading. We're not trying to make 1,000,000 to 1 in one moonshot over here. Just steady, high compounded rates of return with a very high margin of safety. You should be a part of this. Go over to marketfi.com, check us out. We got Banking on Profits, and we've got the Community Bank Stock Investor. You really should be a subscriber to one or the other of those publications. Of course, if you take Banking on Profits, you get Community Bank Stock Investor as part of the package every month. So anyway, guys, that's all from me. We'll be back with a regular schedule a little bit later this week, but I just wanted to check in with everybody since we did not get a regular update out on Friday. Got to get my pictures up. I don't have my Johnny Unitas up in here. I don't have my Pelicans are missing from the walls, so it feels kind of empty. So we're going to try to get that done today and keep an eye on the market and maybe just keep digging, see if we can find anything else to add to the buy list. Have a great week, guys, and take a minute. Let me know what you think of the video. Should we keep doing them, not doing them? Would you rather do audio so you don't have to look at this once a week? Whatever you guys think, send me an email. Let me know, and I'll be talking to you guys on Friday. Have a great week, everybody.